The other thing I want to touch on is the revenue that we're actually just generating from these tariffs, right? That's actually goes into the revenue of the government. And last month was a record month. I think June was the reported month was June of 27 billion. The year before was 4 billion. So we brought in 27 versus 4. And if you look at the full year of 2024, I think it was around 77 billion. So now with this big jump up in June, that run rate before that, we were at 108 billion of revenue brought in. Just put that in perspective. That's the 77 billion that we brought in last year is like 1.6% of overall revenue budget. And so your run rate now is going to be 350, 400, 450. That's going to actually add, before I kind of like 1.6%, if these tariffs double, go from, 2.5 to 5%, okay, it's 3% of our revenue. But now you're talking double digits, 10%. I don't know. What do you guys think about that?
Yeah, I mean, when you're thinking about budget deficits, when you're thinking about U.S. debt levels, I think it's a meaningful impact for our potential. I guess we'll probably never balance our budget at this point, but
Maybe if we
at
can
least,
bend the curve, at least, right?
yes, right. You slow that growth of debt increase. I think from a broader investor perspective, that's probably a good thing, especially U.S. consumers and interest rates, and what does that mean for term premiums? And I mean, it boils down to mortgage rates and all, like, throughout the economy of anybody that's borrowing money. I think it's an important thing to at least, like you said, bend that curve,
Mhm.
regardless of how big of a deficit that currently is. Anything helps.